Ladies and gents, welcome back. This has now become a daily update. I'm not going to do daily updates. It's not my plan. I'm going to say at least once a month at the worst. But if you're getting daily updates, all the better. If I'm doing them, I'm not complaining. So today's going to be a little more of a vlog format. Now, before you close the video, please just hear me out. I watched a video on YouTube. It's gotten 2 million views in about 2 months, and it's from the channel called My First Million. I'm going to show you the thumbnail at least. It's the most popular video on the channel. It says turning 1 million into 1 billion. A masterclass from the Indian Warren Buffett. His name is Mohnish Pabrai. So this was posted May 17th, 2024. It's got over 2 million views. Decided to listen to it. I mean, it's easy to turn $0 into $1 million, but it's, in my opinion, I think it's a lot harder to keep that going to eventually get to over $1 billion, because that's showing it's not just luck, it's not dumb luck, it's actually showing that it's proving your metal. It's proving what you're made of. So how I made my first million into $1 billion. These are the notes I took. I'm just going to read it for you. So we talked about Warren Buffett quite a lot. And what stood out to me was the power of investing in brands. And that really speaks to my channel, actually. We focus on a lot of brand names and people's consumer habits. People's habits, consumers' habits. What is the zeitgeist? Like, for example, before I was able to trade in the stock market, because if I was going to do that independently, I wish I was able to. One of my biggest picks at the time was Apple before they released the iPod. I knew something big was going to happen because of this iPod. It's going to shake up the MP3 industry. MP3 players were not mainstream at that point. And then after that happened, Apple again were going to come out with something called an iPhone. And at that point, there wasn't really a smartphone on the market, but I could see how this was a very sexy device. It made tech very much appealing to all demographics, and especially women, because women were not really into cell phones. They weren't into tech. When the smartphone came out, it made it it's so user-friendly and everything. So that's part of the consumer habits. Looking at these trends, and not just trends, even before the trend exists. So Pabrai mentioned that a great entrepreneur must be able to identify offering gaps, such as Starbucks. What is an offering gap? It is a need or a consumer need that does not exist yet. And the best example was what I just shared, Apple with the iPod, which disrupted and revolutionized the music industry, not just MP3s, but the music industry altogether. People were using Walkmans and then CD players and CD Walkmans, Discmans for the longest time. When the MP3 player came out, people didn't know what to make of it. You had all these different devices like Zune and Diamond Rio, and I was one of the early adopters of that. But as soon as I heard and saw the iPod with its little nifty wheel, you could scroll through your albums that way. It wasn't a touch screen at that point. I knew this was something huge, and I wanted to get on board, but I didn't have the money, didn't have the wherewithal to even invest in the stock market, and it was just miss after miss in terms of missed opportunities. Not that my picks weren't good; they were great picks. It wasn't until Nintendo in 2007 when they announced the Wii. Actually, it was 2006, 2007 in the E3 show. And I thought, this is going to be the next big thing. I don't want to miss out on this. I'm going to put as much as I can of whatever money I have. And I did. And then, lo and behold, I made about $10,000 from the Wii when they released the Wii in 2008. So that's another great example of a offering gap, Nintendo and their Wii. And one thing I haven't been using the lingo of the stock market in the sector, but a lot of the stocks that I tend to favor heavily are blue chip stocks. These are stocks that are, evergreen. They've got the brand name, they've got the experience, they've got the history. They're almost foolproof. Companies like McDonald's, Coca-Cola, that is. Amazon would be one I'd add to the list. Netflix would be another one. Apple, obviously. Microsoft, another one. You've got these great, massive companies that are almost too big to fail. I'm not saying that they'll never fail, but they're almost too big to fail. You could just hold those for decades and centuries. They'll still be around and stay relatively steady or, exponential growth. But slow and steady growth, maybe not exponential growth. Okay, Pabrai continued on. He said, entrepreneurs do not take risks. They do everything they can to avoid risk. And that kind of speaks to this channel. It's what the strategy is with Apex Investor. He stressed low risk and high return. In other words, what I've been stressing is buy low and sell high. But it's so easy to just say these things, it's harder to execute it. And it also trickles and relates into or bleeds into what Warren Buffett said is when people are greedy, that's when you have to be afraid. And when people are afraid, when there's a panic sell, that's when you buy. It's like you see a burning building, people are running out of the building, but when you go in the building, there's a lump of gold and, let's just say there's a hardware wallet, like a Bitcoin safe worth millions of dollars, but everyone's running because of the fire. It's a panic. They're thinking with emotion, not with logic. On the other hand, you have the opposite situation where everybody's going into this beautiful hotel and it looks like gold and everything, but then when you do your research, you look into the business model perhaps, and you realize they're actually bleeding money. They're not making profit. It's all a facade, and you pull your money out, but people are just buying into it. It's a gold rush, and you realize, what? There's something wrong with this. There's something very, very wrong. So that's my example for that. And when you look at areas, this Pabrai, when you look at areas that are hated and unloved, you will find anomalies. So that's an interesting observation. And I mentioned that yesterday in Burberry, and I would say avoid retail, but if you want to take a gamble with that, and it is somewhat hated and unloved, maybe that would be an interesting play. But personally, I think that's too high risk, especially with the way the economy is going, the way the world is going. And one thing he stressed throughout the video, especially towards the latter half, is to just be patient and wait for something weird to cause a mispricing. I'm going to reword that in my own words and just say the same thing. Be patient. It's a must. It's mandatory. And wait for a black swan event. Wait for a stock market crash to cause a mispricing. So we know Tesla's worth $100 plus, between $150 to $300. That's where the 52-week range is, around there. In the event of a stock market crash, it will go way below 150. It's probably going to go to 50 or sub 100 for sure. If you pick up Tesla at $50 a share, say you buy 100 shares, and then you hold on to those shares at $50, goes up to 300. What is that? That's 2 times 3. That's 6 times. So, for instance, you put in 1,000, then you're going to come out with 6,000. Or if you put in 10,000, you'll come out with 60,000, and so on and so forth. The number one trait that Pabrai says that he said that makes a great investor, patience. And I think that's what really makes this channel stand out amongst many other investing channels or stock market related channels. A lot of the channels will identify a stock and say, oh, this stock has gone up, 74%, or this stock is exploding right now. It's going to go to the moon. Buy it now, right? That's usually, it's like we're all we've all become like little, like we're all like Jim Cramer from Mad Money, and we're all just suggesting buy this, buy this, buy this, creating a feeding frenzy. Whereas that's not what I want to do with this channel. I want to identify, yes, good stocks, but I don't want to pressure anybody into buying. That's all on you. But my strategy really is patience. Patience is not just a virtue. It's going to help you in the long run, whether it's buying or selling. Because if you're exercising patience when you buy, that means you're not pressured into FOMO. You're not going to just pick up Tesla at $300. You're going to pick it up at 150 or lower. You're gonna wait. You'll wait a whole year if that's what it takes. But you're not gonna get in at a price where you incur loss. And then on the exit point strategy, so you picked up your Tesla stock, you picked up your shares at 150 hypothetically. So let's say you bought 100 shares at 150. And you're gonna wait until it goes to your price. You're not gonna budge. You're going to remain patient and just not look at it on the daily. You're just gonna put your price alert, set it, and just forget about it because you know what the stock is worth. You know what Tesla's value is. Its true value is at least 300, maybe more. So let's say you do sell at 300. So you've put in your again, hypothetically, it's just say $10,000. You're going to double it. You're going to get to 20,000, and that might take 6 months. It might take a year. It might take 2 years, but you're going to wait because, again, that is the number one trait that makes a great investor, and I wholeheartedly agree. That's what I've been encouraging viewers to remain patient. Just be patient. Things go up, things go down. Stocks go up, stocks go down. It's all part of the. It comes with the territory. And so I'm not afraid to say, I've had great victories in the stock market. I could just mention them off the top of my head, predicting Apple's great rise from, not obscurity, but not really a juggernaut at that point before the iMac. I was thinking even before the iMac came out, I thought that's going to be a good investment. And then the iPod, that was going to be a good investment. Look how that turned out. And then the iPhone, and it just keeps growing and growing. But ever since Steve Jobs, rest in peace, he passed away many years ago, I knew he was the guy driving Apple. He was the guy at the forefront of innovation, and he was the visionary of that company. Tim Cook is just not, he's not cutting it to the same degree. Yes, he's got some great ideas, but Steve Jobs was really the man. Okay. So anyway, as I was saying, you can have many victories, and I've had some victories, just as I mentioned, Apple, Nintendo, Beyond Meat is another one. Co-Diagnostics was a great one, but then it tanked because I got a little too greedy there. That was a lesson learned. I lost, I want to say, actually no, I did cash out. Went from 10,000 Canadian to about 70,000 Canadian. It was like practically overnight because I bought many shares at under $3 and went up to, I think, $20 plus per share. And then what happened was I discovered metamaterials and I put everything into that, and then I lost 90%. So, full transparency, and just not afraid to admit where I've gone wrong. And I was promoting that stock, but it did not prove itself. It had not proven itself to have a history of success. It didn't have the brand name. It didn't prove itself to be a blue chip company. It didn't have the brand strength, and didn't. It also didn't meet the criteria of being something that met people's people's habits or consumer habits. They were just all talk and didn't really materialize into reality. So I made a big mistake with that one, and I'm learning for it. And you have to be patient. You have to be resilient. That's something he didn't mention. That you will take losses in the stock market, and people will be sloppy when they start. Kind of like my channel. I started off really sloppy, and to some degree I'm still sloppy, but I'm learning. I'm being more disciplined, more taking less risks. making sure that I am buying according to what I'm saying, not just being pressured into FOMO, although the three stocks I'll mention at the top of this video after what I'm going to say with BlackRock are somewhat FOMO to some degree, but I realize they have a great potential value ahead of them. And the last thing I want to mention is regarding that video is Berkshire Hathaway. He said is doing or did 20%, so plus 20% every year for 58 years. And they essentially doubled what they were worth every 3.5 years. Okay, so that's all for that blog aspect or vlog aspect. So before, maybe I should just do a separate video on the stocks. I'm kind of weighing whether I will, but in any case, one thing I wanted to bring up is there have been many red flags in regards to a potential stock market crash. We've had Warren Buffett himself sold half of his shares in Apple. You don't do that unless you have solid evidence that things are going to take a turn for the worse. Notice that took place before the Black Monday, kind of like a mini Black Monday that we had in regards to the Nikkei, and it affected the rest of the world to some degree. There's a ripple effect, maybe not matching what happened in Japan, but it did have a ripple effect without a doubt. Now we see the news just today, as of 11:28 p.m. Eastern, which is a couple hours ago or 3 hours ago. BlackRock CEO Lawrence Fink sells 29,450 shares. Okay, let me do the math. 29,000 shares. Okay, let's look up BlackRock first of all. I'm going to look it up and see how much is that worth in dollars. Okay, BlackRock is on my list, and it is worth $854 a share. Okay, so let's just say $855, just round that off. So $855 times how many shares? 29,450. That's easily over $1 million. It's actually $25 million. So $25 million. So he still owns 343,000 shares. So what percentage of the 29,000? That's roughly just under 10%. Just doing the math off the top of my head. But actually, if you add the 30 plus 373, so if you divide that by 373, that's about... So he sold off 21% of his shares. If my math is correct. Does that make sense? 29 divided by 373. Oh, 7%. He sold, let's just round it off to 8%. He sold 8% of his shares. Okay, so that's another red flag. He wouldn't do that if there wasn't something that's going on here behind the scenes. 8.67, sorry, I can't say the word, $8.67 trillion in assets. So he is the largest, I should say BlackRock is the largest asset manager in the world. That is bigger than a lot of companies' GDPs, isn't it? Over the past year, the insider, I think the individual we named, Mr. Fink, sold a total of 106,000 shares, has not made any purchases. So that's just over the past year. So this is a subtle move. No insider buys. So the insider, who is the insider? I think that's him. They just call him the insider now. Okay, so that means he owned, now that we look at just the past year, 106 let's just round it to 107. 107. So 107 plus 344. So 451. So what is 106 divided by 451? 23%. So he sold a quarter of his shares. That is a bigger red flag. That's not just 8%. That is almost a quarter. Okay. Interesting. So let's do the math. They were priced at 843 initially. So let's just do the math there. Times 106, 791. That's 90 million worth. Or is it 90 trillion? No, I think it's 90 million. Or 90 billion. Does that make sense? 90 million? $843 times 106,791 shares. Looks like 90 million. I think it's $90 million worth, if not 90 billion. I'm going to say 90 million. Okay. So that is that's very noteworthy. So what do we do in response to this news? Well, I'm going to pull out a lot of my assets from the stock market. Not immediately. I think the date that we're really looking at is November the 1st. You want to not be in the market until after the election is settled, and then you decide, what you want to do from there. I know what I'm going to decide, and I will post a video on that shortly after the election, whatever the result is, because election years, everybody knows, are crazy. Anything can happen. Anything and everything can and does happen and did happen in the past. You can see that this year. It's been such a crazy year. We've got wars starting everywhere, and just everything's going crazy all around the world. Like, name a country. Is really not a country that is not stable right now. There's craziness in, I think it's Bangladesh, that I just found out about today. Craziness in England. Name the country. There's craziness going on there. Maybe not to the same degree as England or Bangladesh or Israel or Ukraine, but there's some form of instability, and it's brewing all around the world. So having said that, let's look at the stocks now. Yeah, I think we'll just keep this as one video. So Coca-Cola Company. So in the event of a stock market crash, which I think could very well happen very soon, I would not pick this up. I would wait for sub 30. You're going to look at $30 and below, or 40 and below. Because in the height of the lockdowns, March 2020, Coke was at a low of $40, or sub 40. So I think you can expect sub 40. This recession or the depression coming up, if that materializes, could make COVID look like a walk in the park. It could very well go to sub $20. Looking at the previous stock market crash of 2008, went down to $22. So it could be sub $30 in all estimations, but most likely under 40. But again, that's pending a market crash, and that depends on what are the results of the election in America. SunPower filed for bankruptcy. I think it's very much official now. And the stock, I was going to say stinks, but it also stinks, but it sank. But it'll be interesting if you want to, gamble with $20. You could pick up 100 shares for $20. If you have $20 just ready to burn it, and maybe it'll pick up. It might pick up to 30 cents. Maybe you'll get 10 cents times 100. You could make, $10? I don't know. Maybe it's not worth it. But that would be interesting if you want to prove the the old adage, be greedy when people are fearful and fearful when people are greedy. But I don't think this applies to companies going bankrupt. I probably, I'm going to steer clear of this. And I advise everyone else to as well. Because look at that. Even the after hours is showing not very low sentiment. People are very much steering clear of that. Monster Beverage, I don't usually bring this stock up, but I'm going to mention it because it's one of 3 companies that does not have debt. It's like seeing a unicorn in the stock market when a company does not have debt. There's 3 that do not have debt, and one of those is Monster Beverage. The other one is ISRG, and then I think the third one is Meta, the Facebook company there. Let me just double check the name of that company, ISRG. It's something to do with robotics and surgery. But it is on my list. It's a very stable company. I need to look it up. Wait, here it is. Intuitive Surgical, which is stock ticker ISRG, like golf. G like golf. So India, Sierra, Romeo, Golf is the stock ticker. And the third company is Meta. Everyone knows that. I don't have to spell that one out. So this one's down 10%. So this might be a one play that you could invest in if you are a fan of this company. Again, personally, I'm going to start taking my assets out of the stock market and just pretty much invest in Bitcoin only. And, I think Bitcoin will react to a stock market crash. Yeah, I think it will also move in tandem with it, but that's why the stock market is going to be so volatile, whereas Bitcoin, yes, it's volatile to some degree, but Bitcoin is the digital gold. It's going to be around forever, it seems. Not that it will, but that's just the way things are going right now. So, let's see. In the event of a stock market crash, I would say this goes down to 30 or below. Yeah, 30 or below, because this has been relatively stable. Okay, Meta is another great company, another blue chip stock. Monster, I wouldn't call that a blue chip stock, but Meta certainly is. And in the event of a stock market crash, you could expect this to go right down to 90, no, more than that. I think it's going to go below $100. So pick that up at under 100. So this is one of the greatest picks, one of the best stocks you can buy in the event of a black swan event. Stock market crash, pick it up at $100 and below, because that's where things will be headed if that materializes. Again, I'm not Nostradamus, but if things work out that way and markets tend to crash and markets tend to go up again, that's the nature of the beast. This is one of the best plays. Just going to say that frankly and truly. Meta is here to stay, and that will certainly go up to greater heights, probably 500 plus, maybe even 1,000. So you could make tenfold your money, at least fivefold, in the event of a stock market crash, because this is a really good stock. I don't see that going anywhere anytime soon, and Mark Zuckerberg has only become more of an expert when it comes to not just investing, but also expanding Meta's influence on the internet. McKesson is one of the most stable stocks on the internet, or on the internet in the world. And they've taken a dive. Today they're down 10%. I've never seen that before. McKesson usually don't go down at all. So this might be a play you might want to get into, but again, black swan event, stock market crash. If that happens, I would wait for this to go to sub 200. Yeah, I think that's going to happen. 200 or less. Everything's going to go down. So this would be an interesting play. Maybe not so much as Meta, but depends how low this goes. If this can go to 100, that's still a good pickup. It would be equally as good as Meta. Okay, Palo Alto Networks. I only found out about this because of a YouTube ad starring Keanu Reeves. And why is this stock significant? It's because we have the AI industry with NVIDIA, Broadcom, and so on. And this other Lumen Technologies is part of that as well. But Palo Alto provides security solutions for AI, and they've pretty much taken over the zeitgeist. My feeling about the stock is that it's dethroned CrowdStrike in that area of security as it relates to AI. So I would wait for this to drop, pending a stock market crash. You're looking at something like 200 or below. But let's just be safe and say 150 and below. Because 140 looks like the real support here anyway, just from this graph. Who knows, maybe 100 and below. But I wouldn't buy this anywhere above 200. So that's Palo Alto. I added that to my watch list. Beyond Meat had a great day. It was up 24.6%. Again, I've been pushing this stock for quite a while, and actually many years now. Beyond Meat, and it's one of the plays. I'll just show you what happened with Beyond Meat. And I did buy this, I think, at $17 at one point, many years ago. And then it went up to, I think, 100 something, 100 plus. So I did make some money from this as well. I think it was, I can't remember the exact amount, but it was a good amount. So this stock has really helped me in the past, and it's helping me right now. And I could see this going very well to $9, at least $8, if things keep going well for them. But resistance short term is looking like $8 because the market is, very fragile at this moment. It's things are very tense with the way the world is going. So I would say sell at 7, 8, but maybe 8 is probably the right price. It did go as high as $6.79, so it almost touched $7 today, from an opening of $5.51 and a 52-week range of $5.13 to $13. So yeah, very much in the realm of possibility. And because they did beat the earnings forecast, they surprised a lot of people with that. So we will see how things go in the next quarterly, and in terms of the stock market, whether it does take a nosedive. All right, Lumen is down 18%. So they had a bit of a sale. Went even to $4.82. So that was a good buy at $4.82. I was looking to pick this up at $3. I'm still waiting for $3. I'm not going to buy this until it hits at least $3 or below. I think that's really support right there. You can see that valley, and then it just jumps up. But maybe it could be $2 pending stock market crash. But these three companies in particular, these are like the three kings right now of the AI and robotics industries. Besides NVIDIA, but NVIDIA is already outpriced. It's way too high now. But these ones are still in their infancies, respective infancies. Price target for Lumen, I'm going to say into the double digits, at least $10, especially given their recent partnership with Microsoft, of all companies, one of the biggest companies in existence in that area too. So this is being artificially, I can just tell, just from instinct, this is being artificially suppressed in terms of the price. The price is worth way more than what it is. Like this is a steal at sub $2, and even right now it's still a steal. I think it's worth at least $10, and that's a conservative estimate. And I don't own any shares. Full disclosure, I'm putting in a buy order for $3. That's my price point. That's the Apex Investor price. I'm going to give that to you right now. It's $3 and below. And then exit strategy, I just wait for this to grow to $10, $20. So even in the event of a stock market crash, I believe these three stocks are somewhat, not that they're going to be safe, but they're safer than most. As you can see, just in the last 5 days, the stock market has been very turbulent the last week, but look at this stock. Look how strong that is. It is showing a lot of positive consumer retail and sentiment. 128 million volume, way above the average. And we're going to close out with these last two. Serve Robotics, only down 2%, but just such a crazy ride. This is worth, what is Serve Robotics actually worth? The estimate was, I think, was it 40 on my one of my videos I posted? It said price target of 40 plus. Just want to review that. I think it was 40 plus, if I'm not mistaken. Yeah, forecast $46 is the price target, or a 2,200% increase. And this is not just, made up numbers, just pulling things out of the clouds or out of my butt. These are numbers based on their profits that they've reported. It's not just something, they have the numbers and the data to back up this price target. So this is very much in the realm of possibility and reality. And I think $20 is kind of like setting a low bar for this company. So this is just a strong hold. You can pick this up at any price sub $20 and you've gotten a good stock. Even in the event of a stock market crash, I think this is still a good buy. But if the market crashes, pick it up at sub $10 or sub $3. I don't know how low this will go, but I know how high it will eventually get to. It actually hit $30 in the last 52 weeks. Is that right? $30? I don't see that. Okay, that's over here. $30. Well, it says it was at 30. But according to the most recent chart, it only hit, not only, but it did break 20. It broke $20 on July 30th. So that looks like resistance in the short to mid-term. But based on that price target and the data they provided based on what they've earned in their last quarterly sessions, this is headed to $20 very easily. Serve Robotics. And another company is Richtech Robotics, or is it Richtech? I'm not sure if that's pronounced the German way. But Richtech Robotics, they're down 6% and another 6% after hours for a total of 13%. But they were down to 46 cents, 46.5 today, which was a great price. I was waiting for 40 cents and I'd pick up more just to average down, or even 30 cents, because who knows with the shorts, they want to keep shorting this illegally. I have to add, they're doing that illegally, naked shorting, because this stock is worth way more than, it's easily worth at least $1.50, and that's almost a joke at this point. Like $1.50, really, for what the partnerships that they've that have been released lately, in terms of Mercedes-Benz, in terms of Major League Baseball, and then a new one just announced today with Walmart. Actually, I did take a lot of screenshots today of things I wanted to mention in this video, so let me just see if I can look at that for you. Okay, I'm just scanning through here. Here it is, Beaver's Wealth Universe. It's on Yahoo Finance. This was from 8 a.m. Beaver's Wealth Universe announces one kitchen restaurant opening inside Walmart and a partnership with Richtech Robotics. So there are multiple restaurants that are opening up. I think they're called ghost restaurants. Oh, it's not here underneath here, but there are ghost Ghost Kitchens, I think they're called. And they're opening in Walmarts. So I think it's Ghost Kitchen, Walmart, robotics. I'll just put that in the search engine. Yeah, Ghost Kitchens. Okay, they're called Ghost Kitchens. And this stock is well worth. I mean, if you look at the just this chart, the last 6 months, yeah, has not dipped under $1. So this is a great sale. A lot of people are losing a bit of their faith in the stock because they've been tracking it since the beginning of the year, and they thought, oh, they've been waiting patiently, but it's been 8 months, and then it all of a sudden dips, negative 50%, being shorted for no apparent reason to 30 cents. But it was as high as $11. You can see, I think this is worth at least $11 then, based on that alone. Especially that they are delivering on their promises, so to speak. So I think I'll do another video just on Rich Tech Robotics regarding. I did some DD on StockTwits of all places. I know it sounds kind of funny, but there were a lot of good pieces of news that were shared there, and you could fact check these news pieces if you like, and that's what I'm going to do as well. So that's all for this video. I hope that was helpful, and so take this as a warning. There are a lot of red flags that we've seen just beginning Monday and even last week, with Warren Buffett selling off 50% of his shares in Apple, and then BlackRock CEO Mr. Fink there selling about a quarter of his shares in the past year. In the past year, he's sold a quarter of his ownership in BlackRock. That is, if that's not a red flag, I don't know what is. Those two just by themselves. And then we had the Nikkei stock market mini crash. That really was the tip of the iceberg, and I think we're going to see that. But the biggest factor that is going to affect all of this is the election in America, who wins, because we all know who's going to be very, helpful to the stock market, who's going to drive, bring the economy back from the dead, right? Let's just look at, I don't have to say it, you already know. Okay, so pending the results of that, I will get back into the market or not. And that's all for this video. I'm going to do another one on Rich Tech Robotics. Okay, thanks for your time, and see you in the next one. God bless you. God bless your investments.